Good afternoon and welcome to all GST lover. This is one of the most sought out webinar by GST and IDT committee. We carry on different subject, and this time the subject is of one of the prime important, that is GST audit, not by the members but by the department. And what are the issues? So we have a prominent chartered accountant from Indore, Jayesh Bhai Shah, who is the one of the master and a co-opted member in GST and IDT committee, and he has a very good sound background of GST practice as well as GST knowledge. So he shares knowledge on various forums. So we welcome Jayesh Bhai. And yes, today we have with us most our dynamic, most loved, and most enthusiastic chairman of GST and IDT committee, RK sir, Rajendra Kumar sir. Along with him, there is another pretty lady and firebound and one of the dynamic member, Preeti Saula ma'am. She is there. So we welcome Preeti ma'am to our this GST and IDT committee webinar. So I will request our chairman to take further the new initiatives that GST and IDT is taking, and whatever new things happening in this GST arena. Over to you, sir.
Thank you, our very efficient and very energetic Vice Chairman of the GST and Indirect Taxes Committee, who is also heading the Artificial Intelligence Committee of ICAI. I must submit here, members who are not aware, that our AI committee is one such committee in the entire country, which is playing a key role in empowering members in the area of artificial intelligence. Similar to what the GST committee is doing, empowering the chartered accountants in the area of GST. In fact, we are now in the 8 years of GST. 8 years of GST. And in few forums, I have quoted this also, that in one of the film songs, the writer divides the age of a man 8 years. What first 8 years, second 8 year, third 8 year. So the first 8 year is khelne kudne ke din, happy playing days, happy days of enthusiasm and so on. The next 8 years is the year of acquiring knowledge. So the first 8 years of GST were days of games, days of uh, playing by department, playing by the trade and industry, and so on. And now comes the second phase, the next 8th year, where we are in the phase of knowledge acquiring. The ICAI, the committee of the GST, leaves no stone unturned. In fact, we have two people on the screen, Jayesh Shah and Umesh Sharma. Both of them are very prolific speakers. Both of them are very knowledgeable speakers. And the topic that Jayesh Bhai is going to cover today is something very important, because day in and day out, we have a regular interface, face to face, with the audit department of the GST, whether state or central or the union territory. Friends, as you know, it is a record based control that is there in GST. It is not physical control, it is record based control. And whenever there is record based control, audit plays a very pivotal role in establishing revenues, in ensuring that the rules and regulations of the act are properly followed. So audit is something which we understand as chartered accountants, which we are the pioneers, we are the masters. Persons like Jayesh Bhai Shah, who are in depth into this particular subject of indirect taxation, are going to deal this today. I'm happy that he is also a co-opted member of the GST and Indirect Taxes Committee, contributing significantly to the work of the committee and its growth. Umesh Sharma ji, as a vice chairman, is playing a very key role in supporting various initiatives of the committee. Each and every audience who has come to us to this program today, I am personally thankful to you. It is your involvement. We have about 500 plus participants already who are watching us. I'm immensely thankful to you for being here with us. Uh, a line or two of felicitation will be given by our very esteemed Preeti Savla madam. Both of us are in Mumbai today in some other meetings. She is handling the sustainability committee, the women committee, and she is also the member of the prestigious board of discipline of ICAI, which is playing again a very key role in dissemination of justice. I request Preeti Ben to please speak a few words and enthusiastically welcome each and every participant. Preeti Ben.
Hello, friends. Very respected and honorable Chairman of GST and IDT Committee, C. Rajendra Kumar GP, Vice Chairman C. Umesh Sharma ji, and uh, uh, and very respected and knowledgeable speaker C. Jayesh Bhai Shah from Indore. And my dear participants, a very warm welcome to you. It's my privilege, and I can vouch. I'm also part of and a member of GST and IDT Committee, so I am watching the activities which are being done by the committee, and I can vouch that an excellent work is being actually conducted by the committee across entire year. Lot of publications, lot of trainings, and very soon we have RRC also on 2nd and 3rd of August. So please enroll for the activities of GST and IDT committee. I'm sure this will empower all of you and increase the knowledge of each and every one with such a knowledgeable speakers. With these words, I welcome all of you and wish you a very happy learning. And thank you for giving me this opportunity to address all of you. Thank you very much.
Thank
Very
you, Preeti ma'am.
एक minute, Umesh bhai. Very esteemed participants, as Preeti Ben has premised, we conduct regularly conferences, seminars to the branches. In fact, this year we have a dream of conducting an international study tour on GST to those countries where GST is implemented, not far away, maybe closer to India, to study, at least to understand the implementation of the VAT and GST. So I request that as and when we announce this, I hope there will be good participation. We'll be able to undertake a international study tour. So thank you very much. Over to Umesh Bhai and Jayesh Bhai for further deliberations. Thank you, Impreet. Thank you, Nisarg. And thank you, GST committee.
Thank you, Chairman sir. It's very happy to note that international studies tour is also planned. And one of the most important initiative of our Chairman sir, that is the GST litigation course. It is going across India at various branches, and it has been liked by many of our GST practicing chartered accountants. We had near about 6 to 7 batches already finished, and many more are in the progress. Whenever your branch is ready with the litigation management course, be there and enjoy the new glimpses, the deep knowledge of GST litigation courses which are happening. So this is also a big initiatives taken under the chairmanship of our RK sir along with the CMP committee. So thank you, Preeti ma'am, for your words of wisdom. Thank you, Chairman sir, for addressing our members. And now we are back to our subject, GST audits and related issues. And this will be taken up by Jayesh Bhai Shah. So over to you, Jayesh Bhai.
Thank you, sir. Let me just share my screen. Yeah. So here we are ready with the topic of today's webinar. So we are discussing about GST audits. Okay, there are many technical issues in GST audit and how do we reply to the notices. I would like to start with a line. कुछ इस तरह तेज हो गई है रफ्तार जिंदगी की, कुछ इस तरह तेज हो गई है रफ्तार जिंदगी की कि सुबह का दर्द शाम तक पुराना हो जाता है. My dear friends, as you all know that GST department is coming up with many new areas and many new points which generally were not considered by us or not every time known by all the chartered accountants. So the department is looking into the intricacies. Earlier, we never thought कि जब service tax का regime था at that time, there were laws that any property, any government industrial property, if it is being transferred to someone else, GST litigation will come into picture, or service tax litigation comes into picture. But later on today, we have litigations into that. We have some high court decisions into that. We have some stay orders into that. So see, there is a ample opportunity, and also it is a very crucial area where we need to focus, that we should be aware of all the intricacies. I would like to add a small thing that recently, as a co-opted member, and I got this guide of practical guide to GST disputes. Okay, so this is a wonderful initiative taken by our GST committee. In that, it was a very useful book. It also helped me while preparing my presentation for today. So moving ahead, today, the agenda of today's meeting is technical issues in GST, the departmental audits and replies to notices. दोस्तों, मैंने one, I'm just saying a story. Once upon a time, a father went with his son in a garden, and suddenly that kid came to his father, Papa, Papa, मैंने इतना बड़ा खरगोश देखा. तो सडनली फादर टोल्ड, इतना बड़ा नहीं होता बेटा, पापा मैंने नीचे का हाथ तो लगाया ही नहीं था. सो जब हम जीएसटी डिपार्टमेंट, whenever we are going for GST departmental audits, department comes with many different issues while conducting the audit. It is you and me, the chartered accountants, which comes into picture and understand the issues. We many a times when we have specific notifications available, we give the replies on that. There are while conducting audit, there are ample number of issues, but while concluding those issues, we get very small quantum of spot memos or notices which are issued, and either we need to pay the liabilities or reverse the excess ITC availed or something which might have got missed while conducting the reconciliation of GST. So we are starting up with what is an audit, meaning of audit. So meaning of audit is defined under section 2 subsection 13 of the Act. It is examination of records, returns and other documents maintained or furnished by the registered person under this Act, or the rules made thereunder, or under any other law for the time being in force. Now, what needs to be verified? We need to verify the correctness of turnover which is declared, the taxes which are paid, the refunds which are claimed, and the input tax credit availed. It is more or like to access has compliance with the provisions of this acts and rules made thereunder. Now, who can conduct the audit? Let us understand this thing. It is a very important aspect. As departmental people are going to conduct audit, what authorities are eligible to conduct audit? So that is mentioned that audit by tax authorities is mentioned under section 65. The commissioner or any officer authorized by him by way of a general or specific order may undertake audit of a registered person for such period as frequently at such frequency and in such manner as may be prescribed. The officer referred to in subsection 1 may conduct audit at places of business of registered person or in their office. Now, it is very important to understand that where the audit should be conducted. Though that is a place of business. A place of business from where the business is ordinarily carried on, or it includes a warehouse, a godown, or any other place where a taxable person stores his goods, supplies or receives goods or services, or both. Or second place, where a taxable person maintains his books of accounts. Because generally a GST person comes to a place where he can verify the books of account, he can reconcile the ITC, he can see the invoices which are received. Or third is a place where a taxable person is engaged in business through an agent by whatsoever name called. So it happens whensoever any overseas companies are having their ventures established in our country or vice versa. Now, we should understand that what should be the time frame of conducting the audit. So, a registered person shall be informed by way of notice not less than 15 working days. That is very important, because it cannot happen that yesterday only we get a notice and today the officer can come to our premises and start doing the audit. So we need to understand this 15 days guideline is very important, and we should stick to it. And while conducting the audit is conducted, we should remain cautious about it again. Now, the audit under subsection 1 shall be completed within a period of 3 months from the date of commencement of audit. However, it is not necessary. The commissioner, if satisfied, may extend this period to not exceeding 6 months. However, while we are conducting this audit exercise, we should understand that many times these time limits gets prolonged. There may be different reasons. For example, if the data is not received on time, as when the audit notice comes to a assessee, he starts reconciling, although he has all the reconciled documents with him. Generally, he becomes cautious that, okay, the departmental audit has came to me, so let me just re-verify my books of account through a chartered accountant, through his accounts team, or any other way. He starts reconciling his books of account again. Or sometimes when the documents or the invoices are, when there is a pile up of invoices, when there is a very long data, generally a splitting of data is done and the data are kept at a secured places. So why for collecting those documents and giving it to the department, or arranging it for the department officials for their visit, so sometimes it takes time, and that is why the department generally prolongs it as the commissioner deems it fit, that it can be prolonged for a period of time. Now, what is the process of GST audit? First is the communication, which we already discussed. It should be 15 days earlier through GST ADT 1 audit. Communication should be sent to the assessee. For example, if audit is planned for March 15th, a registered person must receive the notice by March 1st. That enables assessee to prepare and gather documents for purpose of audit during these 15 days, which is a well and reasonable time. Now, time limit for completion of audit, we just discussed, that is 3 months, maximum extended to 6 months. Now, important is the scope of audit. What is the scope of audit? The scope of audit is generally verification of records, returns, ITC claims, tax payments, examinations of refunds, ITC utilization, and ensure compliances of Section 16 and Section 17 of CGST Act. For example, an officer may review the turnover declared in GST returns and cross-check if the financial statements to identify any discrepancies, because sometimes when there is some mismatch of invoices, department looks into intricacies, that why if something is received on 31st March and someone has billed it, or the documents are received post that, in books of account we record it in the next year, but in GST records it is recorded in the previous month, as we have a 20 days time for filing of GSTR 3B and GSTR 1, 10 days time for GSTR 1. Now, communication of audit findings. See, once the audit gets conducted, the department needs to tell you that, okay, these are the discrepancies. So first, department issues, many of the officers, generally when they reach out to your premises and see that, okay, the audit is conducted, they issue, on the specific issues, they issue spot memos. So once the audit is concluded, the findings are shared with the registered person in form GST ADT 02 within 30 days. And as I told, spot memos are issued immediately. So you start finding that specific issue and start giving replies to your issue, and ask for notifications of, or is there any document which are available which you were unable to present during your audit course. So for that, you can present those invoices to the GST officer. Now, post you have given all your representations, everything is concluded. Then what action after conclusion of audit? So after conclusion of audit, so all those points which GST officer has raised to you, either he will raise the notices for that under section 73 if your things are bona fide, or under section 74 if he deems fit that these documents were not shared on time, or these documents are not proper. So if he has any kind of that feeling, so he can issue the this thing in section 74. Now, we shall be discussing today many of the technical issues. So technical issues, what kind of technical issues can there be? So I am going to take you to some case studies where we are going to understand the concept and then come to a conclusion. This is a normally brainstorming case studies. Let us start with the first one. First case study comes into picture, which is GST was paid on import of capital goods, but payment was not made to the vendor. So in this, you can see some machines were imported from Germany to India. Now, when the machines were imported, generally the tax was paid in advance, and later on, due to some technical issues, the machine could not run. So ABC Limited, an Indian company, imported a machinery, which is the capital goods, for manufacturing of goods from a MNC of Germany. And the payment term was 90 days from installation run of machinery. That is important, installation run. So however, due to technical issues, machine was unable to run in India. Even after efforts made by the engineers of MNC company, no success was achieved. And later the MNC company asked that, okay, you can simply scrap that machine, and we are not going to charge you any amount, and you can write off our payment, which is looking pending in your books of accounts. And it took almost 2 years to conclude this entire matter. However, post this thing happened, there was a GST audit conducted at that Indian company. So while conducting departmental audit, GST officers identified that the payment was not made to the vendor for more than 180 days. They found out by doing the creditor aging and asked for reversal of GST, ITC on GST on imported goods due to non-payment as per Rule 37. So now immediately that officer asked, sir, that person of that owner of company, he told, sir, I don't know about this section rule. Can you please explain to me? So now he explained, see, he shown a gist of that reversal of input tax credit in case of non-payment of consideration. A registered person who has availed of input tax credit on any inward supplies of goods or services or both other than supplies on which tax is payable on reverse charge basis, but fails to pay the supplier thereof the amount towards the value of such supply along with the tax payable thereon within the time limit specified in the second provision of subsection 2. So the amount that was a huge amount, that was almost amount of almost 8 crore rupees which he needed to reverse. So suddenly that person came into panic that, oh my god, what will happen? I don't have such cash flows, and immediately I need to pay this amount. I need to reverse it with the interest part, so it will be a havoc for me. What to do now? So the applicable law also says that, okay, I need to reverse if I have not paid within 180 days. He suddenly rushed to his chartered accountant and asked him, sir, I am very much in tension that I am facing this issue. The officer has raised, he has asked me to reverse this amount. However, the officer hasn't issued any letter to him. Officer simply first quoted that on a prima facie understanding, you have not reversed this ITC amount. So we need to read this paragraph again. The chartered accountant came to the client's premises. He met with the superintendent who was conducting the audit. He asked, sir, what is the query? Why we need to reverse this ITC amount? So the officer told, see, I am sticking to the law. The law says you have not made a payment within 180 days, you need to reverse the ITC which you have availed, and you have availed it 2 years back. So you need to reverse it with paying subsequent interest on that. The chartered accountant just opened the book. He again started reading this rule. A registered person who has availed of input tax credit on any inward supply of goods or services or both other than the supplies on which tax is payable on reverse charge basis. He took an attention of the respected superintendent that, sir, see, it is mentioned here that while importing the goods, I have already discharged my tax liability. So there were technical issues due to which the payment was not made. However, it is clearly mentioned other than the supplies on which tax is payable on reverse charge basis. So the department agreed that okay, your ITC cannot be denied, and hence this para was dropped. So it is very important to understand that what things are written between the lines. We, you, me, both, as a chartered accountant, we need to understand, we need to read between the lines. We are generally called experts of our profession, so we need to understand what technical issues can we face out of that. So finally, the input tax credit is allowed even if the vendor is unpaid, as tax was paid in advance on reverse charge basis on import of goods. So there is no requirement to reverse ITC under Rule 37 in case of imported transactions. This is also applicable not only in capital goods, it is also applicable in your revenue transactions. Whenever you are purchasing any goods for further production or something, you are already paying duty on that. So the same things will follow here, and the ITC cannot be denied because the tax amount is already paid in cash to government while the bill of entry is made. So this was our first case study. We shall be moving to the second one. So the second one is about Rule 86B. What can be the case study of Rule 86B? So when 86B can be triggered. So what does Rule 86B says? Rule 86B says that whenever a company is having a company, a corporate, taxable person is having a turnover of more than 50 lakh rupees in a single month, he need to pay at least 1% of his tax liability in cash. So we can read the case study right here. ABC Private Limited, a manufacturing company, is based in Mumbai, reported a taxable turnover exceeding 50 lakh rupees in the month of June 2025. The company discharged its entire GST liability using input tax credit without paying any portion in cash. During GST audit, so we can make this date as June 2024 so that we can bring those things into audit. So during GST audit, the GST officer raised a concern regarding non-compliance with Rule 86B of CGST rules, which mandates payment at least 1% of output tax liability in cash. Now, this specific Rule 86B came into effect from January 1, 2021. So you need to understand that if your audit is coming from 2018, 19, 19, 20, till the dates till for 5 years, you should know that it is not applicable for years when till this Rule 86B was not applicable. So it didn't came into force. So only the cases after 1st January 2021, we need to focus on this Rule 86B, where the tax liability has to be discharged. Now, the turnover exceeded 50 lakh rupees. We need to pay 1% in tax, and this happened almost a year back. So the department asked for interest of entire year. The company rushed to its chartered accountant, asked that, please, sir, help us in the matter. We shall be in trouble if such huge tax liability is ascertained, because the company was having a turnover of more than you can say 100 crore rupees. So they told that suddenly we need to pay a huge tax liability and we need to pay it with interest. So everybody was in panic. The entire accounts department came into panic. The smart chartered accountant immediately prepared a reply. he came, he understood that what are the issues, sir? Please elaborate it to me. Suddenly the accounts team told, sir, we were having this turnover, we are having such higher turnovers, but we forgot to follow this rule 86B. The chartered accountant told, okay, chill, take a glass of water. And he immediately prepared a reply. He asked for the income tax returns of the managing director of company. He immediately saw that he has filed his ITRs with a taxable income of with a tax effect of more than 1 lakh rupees. So he immediately called and prepared a reply with the accounts team by attaching the ITRs of managing director, which has paid over 1 lakh rupees of tax in income tax in last 2 financial years. This is being an exception to this rule. Hence, the matter was again dropped and no tax demand was levied on the company. So we should understand what all triggers 86B and what are the exceptions to this. So 86B is triggered when the turnover exceeds 50 lakh in a month. What you need to do is you need to pay 1% of your tax liability in cash. Now, in case some companies miss to that, so they have an exception if they are having very big ITC and though they are profit generating also, and the directors are taking huge salaries also. So there are exceptions to that. First exception is for individuals. I'm just briefing it out. If any one of the conditions are met, 86B is not applicable. The first one is income tax is paid more than 1 lakh rupees in last 2 financial years. Focus, it is not 1 financial year, it is 2 financial years. Second point is regarding in case of inverted duty structure business models where your input is of 18% and your output is of 12% or any different rate lower to the higher slab rate. So you can go for a refund of your ITC. A refund can be granted only in 2 conditions. Either it is an inverted duty structure or export of goods. So if you have got a refund of ITC of more than 1 lakh rupees in your year, then again you are exempt from this liability. Okay. Now the third point is your output tax liability if you have paid 1% in cash. So that is a basic requirement. Now, who all are exempted from that? So the government departments, public sector undertakings, local authorities and statutory bodies, they are exempted from these conditions of Rule 86B. Now we are discussing for partnership firms, LLPs. So if such kind of firms are there, what cautions need to be taken or what all are the exemptions, exceptions, I would say, by which Rule 86B is not applicable. So the first one is any of the two partners. Again, we should focus any of the two partners, or in case of HUF, a Karta of firm has paid income tax of more than 1 lakh rupees for 2 consecutive years, two continuous last 2 years. So again, to focus, it is two partners, both have paid more than 1 lakh rupees tax, 1 lakh each has paid more than 1 lakh rupees tax, then only you are getting an exception to Rule 86B. The second one is if the output liability is paid for 1% of total tax liability, then you are again exempted from that. And the third one, more or less like an individual proprietor firm, if your partnership firm or HUF proprietorship firm has got a GST refund of more than 1 lakh rupees, either due to inverted duty structure or something, uh, of more than 1 lakh rupees, then you are having an exemption from this specific Rule 86B. Now, we need to understand the third one is body corporate. We discussed in the previous slide that here that was a body corporate, a company on which this GST departments raised this issue. So here, any of the director or managing director of a body corporate has paid income tax of 1 lakh in each of the last 2 financial years. So understanding this, I think the matter you must have understood that it is minimum either 1% आप अपनी tax liability discharge करें of the months where you have shown 50 lakh plus turnover in a single month. Now, moving ahead, so the conclusion is GST Rule 86B has significant implications for registered taxpayers with a turnover exceeding 50 lakh rupees. So all the chartered accountants need to focus, need to recheck that whether in any month of our client, if the turnover has exceeded 50 lakh rupees, whether tax has been paid for 1% or not. Understanding this provision, the restrictions and exemptions is crucial to remain compliant. The article clarifies applicability of rule through example providing to the taxpayers. Now, just a second. So, my dear friends, now we should understand many of the companies are having their industry set up. There is an industrialization ka door in India right now. Many companies are setting up their manufacturing units. So they are availing the ITC input tax credits on the capital items, on the machineries, on buildings and everything. Now what to do and what not to do? We need to understand this thing. And also we need to understand about the 32nd GST Council meeting minutes where it was told that if you have availed ITC and not utilized it, whether you are liable to pay tax or you are liable for interest or you're liable for penalty. So all those things will be understood through this specific case study. Now, what happened here is XYZ Infrastructure Private Limited, a company engaged in infrastructure development, purchased capital goods such as machinery, building material for financial year 22 and 2023 and availed input tax rate immediately upon receipt of invoices. Even though the assets were not yet capitalized in the books of accounts, during subsequent departmental audit or through the overview of department, it was observed. See why department came into the picture. The important point is they were already having their existing business. Now the company started to expand the business in the same state. So due to that, when the department came for audit, they suddenly found out, okay, there are a lot of capital items which you have availed the ITC of. So the department told that you have availed excess item, this blocked ITC under section 17(5). So you need to reverse it. Now the accounts officer of the company, they immediately told that, sir, we are still our manufacturing unit is just completed. However, we are not commenced our production part. So the company, the GST officers asked that, okay, give us a list of all the vendors for which you have availed the ITC as per your books of account or purchase register. And department verified it with all those which are supplying the blocked items like cement, concrete, steel, bars, all these items which are considered under block credit for a normal company. So this infrastructure development company was making some balance of plant like things, but in a normal company, for say a pharmaceutical company, you cannot avail an ITC which is blocked under section 70 subsection 5. So the company, upon being notified that you need to voluntarily reverse the ineligible ITC. However, the department proceeded to impose interest and penalty, treating the initial availment as an offense under section 74, alleging wrongful claim. The company contended that the availment was based on company told that it was a bona fide intentions in law, and since there is no intention to evade tax or suppress facts, penalty should not be applicable and the case should be treated under section 73. But now comes the understanding of this topic that if the company has not yet utilized the ITC, so what company was doing is company was claiming entire ITC which was coming into books of accounts, and the chartered accountant of company, while capitalizing the assets, normally there's a concept of asset capitalization. So it is generally done through a chartered accountant certificate. The chartered accountant, while capitalizing, verifies that what all credits are eligible, what all credits are ineligible, what all are blocked credits. He needs to bifurcate it during capitalization, and accordingly the GST amount on that assets which are blocked. So it is added into the value of assets and capitalized in the books of accounts. So here the department was of the contention that, okay, you have availed the ITC and you are not, until the department hasn't given you the notice, you have not reversed it. So it should be considered as a Section 74 malified intention, and you should be chargeable with a higher rate of tax, interest and penalty. So we need to, what key points we should consider is mere wrong availment does not amount to penalty automatically. If the ITC was availed bona fide, that is with no intention to evade tax, because accountants are not always equipped to understand that whether this ITC is eligible or ineligible. It is we, the chartered accountants, the GST officials, they understand the law. So here they come into picture and they guide that, okay, on these items, you don't need to avail the ITC. And even in case you have availed the ITC, you don't need to worry a lot, because earlier there was a provision that if you have availed wrongful ITC, you need to pay interest, penalty and everything. So if the reversal is done before the show cause notice or audit, no penalty if voluntary reversal is done upon realization or clarification. Now, interest may be imposed by the department under Section 50, but if you give proper details of the 32nd GST Council meeting and state that, okay, it was not intentional, it was due to our accounting flaw, we have done this, so you may get a relief out of that. So I'm discussing similar points, that how to reply to the notices also. If you have got a notice and need to consider that, okay, how am I going to reply on this, you need to mention that, okay, in the GST's 32nd GST Council meeting, it was clearly mentioned that in case you have availed ITC but not utilized it, so you have not utilized government's money. You have availed it in your credit ledger, but you are not sure the things were not capitalized. A CS certificate can be issued that the things were under capitalization, and once the capitalization will be done, the ITC will be reversed. So here department has powers to drop that point. Now, if the department finds that during the audit or investigation that you have availed this ITC, now, my friend, this scenario is when you have actually availed the ITC. When the company has availed the ITC, which is actually ineligible. Now, in that case, penalty can be levied, because either due to unknowing of the law, if the person is unaware that, okay, I cannot take ITC of car, I cannot take ITC of in building material, which is there in law, but not everybody is aware of that. So we as a professional need to make our clients, the people, aware about the block rate part. So penalty can be imposed if department finds that actually there is a malified intention to avail excessive ITC, and they may charge you with the company with interest and penalty both. So now, before capitalization, ITC should be evaluated on nature of item and not timing of item. Now, capitalization status doesn't make ineligible ITC valid. So while taking the ITC only, you need to check that if you have availed that ITC in the last column, you need to mention that this is ineligible ITC, either of block rate or others. All of you must have seen the GSTR 3B return, in which we need to mention this, that these are ineligible ITC, either these ITC belongs to block credit or these ITC belong to other ineligible ITCs. Now, this is a small gist or understanding of the matter, that ITC wrongfully availed but voluntarily reversed before deduction. So no penalty is payable, interest can be payable, but for that you need to give representation to the department that it is due to our delay in utilization, and basically not delay in utilization, it is as per the 32nd GST Council meeting minutes that we have availed ITC but we have not utilized it. See, it should be very clear to everyone that if you have utilized the ITC now, though it being later on you got again a lot of ITC in your ITC register, once the ITC is utilized, ineligible ITC is utilized, you are liable to pay interest and you are liable to pay a penalty on that, because you have used the money which does not belong to you, the ITC which does not belong to you. It is specifically mentioned that block credit ITC cannot be availed. So we should be very cautious while doing every year's checking every year's books of accounts of our clients, that no block credit ITC should be availed. Generally, this practice is followed while filing of GSTR 9, where the client employs the chartered accountants, engages a chartered accountant to verify the books of accounts and see whatsoever eligible ITCs and ineligible ITCs are there. This comes under the scope of the chartered accountant to verify the books of accounts. So even we are having very good initiatives of our GST committee that we are taking these, trying to put these points in the tax audit manual also, which shall be issued very soon. So ITC availed and used for detect if the ITC is availed and utilized, means used, and it is detected by department, in that case you are liable for penalty and you are liable for interest both. If ITC of block goods is knowingly claimed, okay, so then it becomes a malified intention, and yes, you will be liable for penalty under section 74 and also liable for interest from the time you have availed that ITC or you have utilized that ITC till the date of your this notice is being issued, or till you pays the liability. The notice is issued and generally they ask you to pay it immediately, but if you take time, so you need to calculate from the date of issue, the date of utilization of ITC till the date of payment. So this entire period should be covered for making a payment of ineligible ITC. You have both the options. You can pay this ITC through your ITC ledger, but you need to pay penalty and interest only through your cash ledger. So that thing should be kept in mind. Now, okay, so we just have gone through 2-3 case studies. Now we are moving ahead with again a very crucial case study of Rule 42. So Rule 42 comes with the common credit. So common credit, what is a common credit? Generally, when you have availed an ITC and you are having this both the businesses, one is your taxable turnover and the other one is your exempted business receipts. I would give an example. If a company is having two businesses, one is manufacturing of goods and the same company also has a business of petrol pump. Okay, so petrol pump are generally covered under VAT. They are not covered under GST. And if any ITC, excessive ITC has been there for your this excessive ITC for the entire business is there. So for that, you need to focus that total ITC should be bifurcated through Rule 42, that common credit things should be segregated for taxable and for exempted proportionately as per the usage. Now, let us discuss the matter that what Rule 42 says. Manner of determination of input tax credit in respect of inputs or input services and reversals thereof. The input tax credit in respect of inputs or input services which attract the provisions of subsection 1 of subsection 2 of section 70 being partly used for the purpose of business and partly for other purposes, or partly used for effecting taxable supplies, including zero rated supplies, and partly for effecting exempted supplies, shall be attributable to the purposes of business or for effecting taxable supplies in following manner. The total taxable input involved and accordingly you need to basically these are the same formula which are available to everyone either on GST websites or your books of books, that how the common credit is getting calculated. So now we need to understand what happened here is ABC Consultant, a registered service provider under GST, regularly invest surplus business funds. So this concept is regarding mutual funds. Many times, once I was in one of the big fours, and we conducted audit of a very big MNC. So we conducted a treasury audit of that company. So that company was having around 300 crores receipt, and they need to pay it to the other vendor with a credit period of 15 days. So for 15 days, that 300 crores are going to remain in his bank account. So that MNC, what they used to do is they used to immediately invest it in mutual funds. So if they are investing it in mutual funds and for a period of time, they are analyzing that which mutual funds are good, which can give a good returns to us. So they invest immediately the surplus funds in that mutual fund, and post just a day before when they need to make a payment, they sell off the mutual fund units, and immediately and in the next day itself they get the entire amount back into their bank account and they make the payment. So their business was of not this investing, their business was of some telecommunication work. So ABC Consultant, a registered service provider under GST, regularly invests surplus business funds in mutual funds and other financial instruments, earning interest, dividend, capital gains over time. So many times if we get surplus funds and we get some extra time, so we may also be liable for capital gains in that case. So the investments are made in the name of business and withdrawn periodically based on liquidity needs, which is a very understandable thing. That okay, even in today's time, if you understand any company is having even a surplus fund of 1 crore or 2 crore rupees, they are following this approach of investing this amount into mutual fund units or some or the other way. They want to earn out of this debt funds which are kept with them. So during departmental audit, the GST officer raised a query regarding the applicability of Rule 42 of CGST rules, which mandate proportionate reversal of common ITC when input services are used for both taxable and exempted supplies. So you all must be aware that investment in mutual fund, these are generally exempted supplies. Since income on such interest and dividend is considered exempt under GST, the department contended that the portion of common input services credit like legal credit, accounting work or administrative expenses should be reversed proportionately. So see, this is a very critical point, and this comes in almost every GST audit we people are looking into these days. So the company, however, argued that the investments were ancillary and not directly linked to the business or core taxable activity. What company tried to contend, every one of you must have understood that it is not our core business activity. Okay, this was just an ancillary and not directly linked to the business core taxable activity. Hence, Rule 42 should not apply. This raised the issue where investment income constituted exempted supplies for the purpose of ITC reversal under 42. And if so, whether ITC reversal is mandatory or such income, even when investment are made from own surplus funds. So we need to understand this also, that okay, this is not our regular business activity, but every year the company is on some bigger MNCs on huge profits. So excess of their profit amounts, if they are going to pay bonuses to their employees, bonuses to the shareholders, even after that they get surplus funds available with them. So they generally used to invest this amounts. So what help this investment does, that this always gives the liquidity to the company and also earns them an amount on this surplus funds. Now, what are the things we need to focus on? So, Rule 42 governs reversal of input tax rate when input services are used for both taxable and exempted or non-business purposes. And the second is relevance of financial services. securities, shares, mutual funds are treated exempt supplies under GST, even though trading is in securities is not supply. It's deemed exempt for ITC purposes. So now I'm giving you a gist when the applicability comes and what to do. So in Rule 42, applicability of investments in mutual fund for individuals. Individual investing in mutual fund, usually GST not registered under GST. This is a passive investment, not a business activity. So no ITC or common input credit is tax credit is used. So the Rule 42 is not applicable. Now, again, we were discussing this for a company. For an individual, we understood that, okay, this is out of his interest that he invests in mutual fund or he invests in shares. He understands financials very well. Many of the bigger firms or some service industry companies, they are investing, service industry firms, they are investing their excess funds in mutual funds. But if it is not their main line of business, so no ITC or common input is used, and hence Rule 42 is not applicable. You do not need to reverse any of this ITC. Please focus while department is conducting the audit or department has given you any notice in this regard. You need to understand and provide a proper reply to them. You need to mention that this is not your core business activity. Every word has its importance. If you'll mention that it is not a core business activity, it is not ancillary to my core business activity, then only you are going to get this relief. However, this may continue for a longer time, but ultimately there are higher chances of getting a relief. Now we are discussing about the companies. Now what companies do? Companies park their surplus funds. They are registered under GST. They park their excess funds. Investments are not linked to the core business supply. No direct input tax credit is used because it is not accounts people which are going to daily track that, okay, which mutual funds are doing well. There is a dedicated company. If someone has advised to them, so there are chances that only that advisory ITC can be considered. But however, generally company does it on its own by the understanding of the directors and all. So they take a decision, okay, we need to invest this amount. So if no direct input services are used to earn this exempted income, the Rule 42 is not applicable. It is purely incidental to the business. So we are ultimate conclusion is Rule 42 is triggered only when input or input services are commonly used for both taxable and exempted supplies, and the exempted income, for example dividend, capital gain, is linked to the business activity. For the companies which are actually doing only this work only, means which are having huge portfolios and they are regularly investing and taking out money on that, from that, you can say PMS companies, portfolio management companies. So if they are doing this work, they have to reverse the ITC. Okay, but for those which are not having this as a major core business activity, they do not need to fall under Rule 42. So ultimately what the summary says is, for an individual investor, Rule 42 is not applicable. For company which is having incidental investment, means this is not out of their main business activity, this is just incidental investments, again then the Rule 42 is not applicable. And for active securities trading or NBFCs, Rule 42 is applicable. So only that person who is enjoying is the individual investor on which Rule 42 is not applicable, and companies whose incidental investments are there in Rule 42. So the Rule 42 is not applicable to them. Dear friends, now we are discussing on a very crucial point, which is e-way bill. Now understand what e-way bill says. Earlier, what was the scenario of e-way bill? What is the current scenario of e-way bill? I have just given you a case study here. So I'm just briefing you this case study only through this picture, that a company actually tried to send their products through ship, but on that immediate time, the overseas company which was importing the goods, they suddenly told, no, we want it on a very urgent basis. You send it to us through air cargo. So the old e-way bill was already being raised, and the new e-way bill was raised. However, the accountant, as it was a very early era of this e-way bill, so he forgot to cancel that e-way bill, and both e-way bills were reflecting in the at the portal, and the department inquired about it. Now, what e-way bill system is? E-way bill system is the GST is for GST registered person and enrolled transporter for generating the e-way bill, a document to be carried by a person in charge of conveyance electronically on commencement of movement of goods exceeding the value of 50,000 in relation to supply. See, there are different values for different states also, but majorly it is 50,000 in relation to supply, or for reasons other than supply, or due to inward supply from an unregistered person. Now, see what the e-way bill concept says. Just a second. Yeah. So what happened in this particular case scenario? So ERY Limited, a pharmaceutical exporter based out of Pithampur, Madhya Pradesh, received a GST notice for generating two e-way bills against the same export invoice for consignment originally destined for Spain in the year 2018-19. So why this thing came so later? Because while conducting audit, the department told that we are looking that you have raised two e-way bills. So you must have sent goods twice. As per their perception, it was not, they inquired about it, that whether you have sent two vehicles, because earlier you asked for one vehicle, that e-way bill was generated and it was not cancelled, and you immediately, even not immediately, after a day or 2 days, you immediately generated one more e-way bill on the same invoice. How can you do that? You must have sent goods for both the locations, as nobody can track that at that time. However, now as we are having every system in place, we can see which ITCs are there, which are the e-way bills there, which are the invoices are there. We are having everything linked now nowadays. So we have just checked it, and a system gave us a pop-up that on this invoice two e-way bills were made. So the first e-way bill was generated for movement of goods to port. However, due to vehicle capacity constraint, the shipment had to relocate to air cargo. So what happened is, earlier it was to be sent through port, through ships, and later on, due to urgency of the company, importing company, the goods were sent through air cargo. Meanwhile, the accountant made an error. An accounting error resulted into failure of cancelling the first e-way bill which was generated. Now, the GST department treated the duplicate e-way bill as violation, alleging suspicious movement of goods, and imposed a penalty under Section 129 of the CGST Act. Now comes the picture that this entire thing was earlier looked after by the accounts team of the company. Suddenly came that you have sent these two consignments, and only one invoice is generated and two e-way bills were generated. You're trying to fool us, the department. So suddenly there came into picture that accounts department told that no, it was not there, this and that. So the department was not convinced. Then this accounts team asked the managing director, and he called a chartered accountant. Ki, sir, please help us out in this matter. So what happened is, the chartered accountant came into picture. He simply came, and he primarily noted that what goods are being there for which duplicate e-way bills were generated. So primarily the point to be noted was that the goods were to be exported and not for domestic supply. So it has to go to any port. So immediately they asked that whether they have went to any port. So the account team told, yes, sir. It went to the Nhava Sheva port near Mumbai, and it was then received by the customs also. But as we got an urgency from the importing company that you need to send it immediately because they were manufacturing some special pharmaceutical products. So we immediately called it back, and we are having every document available from the customs and excise department that okay, these goods were received and again sent back. So e-way bill, now we should understand e-way bill was applicable from 25th of April 2018 in Madhya Pradesh. This incident was of 2018-19, which was a very initial years of this e-way bill process. So not everybody was aware of it. Not everybody was having expertise in this. And secondly, when two e-way bills are generated on a same invoice, this is not a usual process. This used to happen. This cannot happen now because duplicate e-way bill was due to system technical issues as should have been prompted before generation of duplicate e-way bill of same invoice. For example, department basically the e-way portal generally gives a pop-up that you cannot generate. Now you cannot generate two e-way bills on the same transaction. Generation of duplicate e-way bills for same document by consignee and transporter is not allowed henceforth. So this came into effect from 23 April 2019 as per release notes at e-way bill portal. So now, after 23rd April 2019, no two e-way bills can be generated on the same document on the same invoice number. So there was a system issue in that which got resolved, but the matter was before that. So immediately while submitting the documents, what the company did and what the chartered accountant came into picture did, he made a detailed reply. He mentioned about the transaction. He asked about the purchase order of that importing company. The purchase order was received. Then when the goods were dispatched, it was in the name of the same importing company. Just a second. It was on the name of same importing company. It was sent to the port. Now, whether there was a doubt whether it was actually for the port or not. So yes, the customs have given their approval. This was received by us. However, due to some issues, it was immediately sent back that the company needed it on urgent basis. So they have sent it to air cargo. Again, the same e-way bill, the other e-way bill, which was new e-way bill, which was created, goods were sent from Nhava Sheva port to the airport and through air cargo. The goods were shipped. For same invoice, two e-way bills were generated. Now, looking into all these documents, the department asked for the LR copy, shipping bill, delivery records. So everything was given to the department and department got satisfied. So we need to focus that even if such scenarios comes to us, what we need to focus is we need to get all the relevant documents regarding this so that department does not have a point to doubt that whether this was a bona fide transaction or a mala fide transaction. So if both are used mistakenly, we have to explain it with the documents that okay, it was by mistake two e-way bills was created. Now in this case you may cite Madras High Court ruling. I'll be sharing you that. Now if the demand is raised and if you're very having all the things bona fide, the demand is raised, you need to immediately pay 15% of disputed tax and pay make an appeal. Okay, because if you're having all documents in place and if your transaction is actually genuine, you need to immediately file an appeal and put it to the department and show it to the adjudicating authorities, be it commission appeals, be it GST appellate tribunal. We all are desperately waiting for that. Now, the case laws are Ganesh Engineering versus Assistant Commissioner, Chennai. This was writ petition was filed and the rulings of 2024 decided on the 8th of March 2024. The taxpayer generated duplicate e-way bills, identical invoice number, date, value, consignee due to new employees inadvertent mistake. So it is not always that it was generated due to some other issue. Some new employees are there which are not familiar, right? nowadays, all of us are aware that not all accountants are capable of doing things. They need some training purposes. So if they are getting some training and after that they are generating something, things can go on a much better direction. So only one physical consignment was sent per invoice, even though two EV bills were generated. Again, this thing happened very earlier. So the Madras High Court quashed the demand order and allowed appeal outside limitation subject to the payment of 15% of dispute by March 2024, enabling filing of appeal within 2 weeks thereafter. And department, basically the High Court considered that, okay, this is a genuine case and this was a inadvertent mistake done by the new employee of company. So the case is fit to be heard, and what best decision can be given if the things looks genuine, the government, the High Court may give a favorable decision. Now, the second case law is of Vimal Traders versus Assistant Commissioner. This writ petition is again 7117 of 2024, decided on 20th March 2024. The court held that generating of multiple EV bills citing the same invoice number was an inadvertent technical error. So this was more of a technical error. The assessing officer failed to consider the taxpayer's explanation and documents properly. The order was quashed and the matter remitted for fresh consideration with opportunity to respond. So the matter was actually remanded back, and it was advised to consider the matter with looking into all the documents, and whether the transaction is genuine, then relevant relief should be granted. So, what are the practical takeaways by this specific EV bill case study? What we understood. So, first thing is the situation is when the duplicate EV bills due to technical error or inadvertent error, only one physical consignment is sent. So, court treated it as a technical mistake and not a tax evasion, and hence a recommended action was explain the mistake procedure, evidence of single consignment, paid GST and return is filed, then it should be considered bona fide and no interest or penalty should be availed. Okay. Now the second one is tax demanded based solely on duplicate EV bill counts without considering explanation. High Court may quash assessment orders and allow appeal despite limitation if explanation is credible. Now, what are the recommendations? They engage a right chartered accountant and counsel or and request for reversal of the litigation. Okay. Now, basically, you can request for a remand back so that the matter should be understood by the authorities and relevant relief should be availed. Okay. When still the department is not listening to you, what last concluding thing you have? You have to file an appeal, which should be very within the time. You should not go for a delayed appeal. The court allowed the appeal if you pay 15% of disputed tax within appeal is filed within 2 weeks. Comply with the payment and preserve appeal rights. Basically, you need to exercise your right and appeal for the relevant case. Now we are coming to an entirely very hot and burning topic. We all know that nowadays we are getting many notices after GST audit is concluded. Now, can you see for which years we are getting this issues, this notices? So for some years which are actually time barred, we are still getting the notices by taking it into section 74. So here we are discussing about a bona fide taxpayer and a mala fide taxpayer. So bona fide comes under section 73, which due to some mistake or not knowing of exact nature of that law must have done some mistake and is seeking for a relief, or he must have given his explanation which were not considered. His books of accounts were presented timely. Some on some technical points he wasn't able to pay the GST, and later on some demands were raised by the GST audit department to him. and the other one is the malified intention taxpayer, who is actually utilizing ineligible ITCs also, and taking unnecessary privilege of law, and taking excessive ITCs, because generally everybody is not aware that, see, this section 73 74 comes when there is a detection by department that, okay, you have taken this ineligible ITC, okay, you have taken this incorrect ITC, you have not paid this tax, you have short paid your tax, you have not shown this much turnover, you have shown this short turnover, you are hiding your turnover. So all these things come for section 74, where there is a malified intention of person. So the characteristics, section 73, you can issue the notice for 3 years. For section 74, you can go for 5 years. There is a penalty exposure of 0 to 10%. I think it is 15% also some places, and up to 100% in section 74. Scope is non-fraudulent defaults, where there is no intention of fraudulent activities. That was an unintentional default which might have happened on some specific cases. He might have missed that actually it is taxable, but I wasn't aware. Either the rates were different, he paid, there are change of rates from time to time at GST portal of some products. Every time in GST council meetings, you have different rates. So you may look into that, okay, I have short paid the tax because I wasn't aware of the updated rate which got updated in between the year in some GST council meeting. So that should come under section 73. And the section 74, where you have intentionally either shown it in the zero rated supply. In recent time, I would share a small example. Let me just finish. Show cause notice is issued. It is standard procedure, and show cause notices are issued for asking that this tax is payable. You need to pay it in section 73 or 74. So that comes accordingly. So I was recently sharing, before discussing this specific case study, I'm just sharing many of the vendors recently got notices from GST department for conducting audit, when they were doing this supplies of imported goods. They were importing something from China, and with a rate of 12% due to HSN. Earlier it was not necessary to mention HSN at different e-commerce platforms. So they were importing the goods and later on selling it. So the portal, the e-commerce portal, generally provides this criteria that your goods are of 5%, your goods are of 12%, 18%, which percentage you just need to select that. Nowadays, the awareness has begun, and the portal itself is taking as per the HSN code, and the rates are automatically fetched in the e-commerce portal. But earlier it was not there. So what happened is, earlier different rate items were there. People were actually purchasing the goods at 18%, and see, a layman does not know that what things are to be done and what not to be done locally. So he was actually selling those goods at 5%. Sometimes people were calling goods underbilling, and later on selling that on this e-commerce platforms at again reduced rates. So when department found out this, they called the data from e-commerce portals, and what they did was they immediately took all the HSN and they simply put a VLOOKUP formula with the HSN mentioned in the GST tariff, that what rates should be levied on this and what rates are actually sold. So immediately department found, oh my God, there is a actually shortfall of tax that the people were not aware, and immediately section 74 notices were issued to them and tax was collected. So this was happened somewhere 3-4 years, 5 years back, and every one who was doing this e-commerce business, they got aware about it, and they started following right rules, and they actually paid a very hefty interest as well as penalty on the taxes which was short paid. However, now the things came into compliance, because earlier the layman was not aware of it, and many of times the consultants are there. So the chartered accountant actually provided right guidance and helped them to move out of these issues. Now, coming back to this case, During a GST audit of Spectrum Industries, department issued a show cause notice under Section 74 of GST Act, alleging tax evasion and suppression of fact, even though the taxpayer has voluntarily provided all the relevant documents, reconciliations, and returns in response to the audit queries. The notice aimed to extend the scope of audit and hence the quantum of demand by invoking extended limitation under Section 74 instead of Section 73. So right nowadays we are all facing these issues in our GST audits, that some things which are actually not getting time barred. Sometimes department issues, as department also foresees that every penny of tax which is getting collected, it is being used for our nation's development. So many times department also goes ahead with this criteria that okay, issue them this notice under Section 74 because they give an extra year's benefit, that okay, it can be taken for a one more year tax which can be collected by the department and can be used for national development. However, the taxpayer claimed that their intention was bona fide, no fraud or suppression exists, and any discrepancies were minor or disclosed proactively. So the company contended that we have given all the documents and in time, and the section which was levied on us is actually wrong. The company argued that invoking Section 74 was unjustified and an attempt to bypass the standard process of recovery under Section 73. So for this, my fellow friends, we are having a very good thing, which is appeal. What I personally feel, if you are doing this GST audit and getting this audit done with department, and department is issuing some notices in some sections which are incorrect, immediately you should go ahead for an appeal. Why? Because something, if something is going wrong, we being professionals, we understand the case, we understand the law, we should always focus and mm, file an appeal. So what happens is, if one person will get benefited, that case law will become milestone for everyone, and everyone will get a better relief out of that. For example, I'll just tell the Gujarat High Court decision in case of leasehold rights sold of a industrial land to someone else. Department was of the contention that okay, this is actually a transfer of leasehold rights, and rights should be considered under services, and tax liability should be levied. But with a decision of Gujarat High Court, and also in the previous era of service tax, it was mentioned that the transfer of any of the industrial land, it should be considered under transfer of land and should not be considered under service tax. However, some basically departments took is that as transfer of leasehold rights, and rights comes under services. However, department issued notices, and the relief was granted through High Court. Even I would means we are of a very good opinion that government should also consider this part, that actually the same thing is taxable under income tax also. We understand in income tax, transfer of any of the industrial property is considered under capital assets. Any of the transfer of capital asset is treated under capital gains, and if being a land, it is treated, indexation benefits are given. So generally you cannot interpret two things differently in different laws. Interpretation cannot be different in different laws. Interpretation has to be same. Now, in this, what we understood is we should file an appeal in case we are getting a notice in incorrect section, for example Section 74, where your intentions are actually bona fide and not mala fide. So reply to notices against Section 74. Issuing notice under Section 74 to extend the limitation period or inflate the demand quantum without providing intent to evade tax is legally unsustainable. Courts have already held that mere difference in interpretation, clerical errors, or procedural lapses do not constitute suppression or fraud. In such cases, the department must initiate proceedings only under Section 73, using Section 74 as a tool to cover additional years or increase penalty exposures where no mala fide intention exists is not only contrary, but the law also also a violation of principle of natural justice. Thus, if a taxpayer has acted transparently, furnished all records being audited during the audit, and there is no finding of intent to evade, then proceedings under section 74 is incorrect. It should be dropped and must be challenged either by way of representation or before the appellate authority. So this is a basic insight. If wrongful availed but utilize ITC, this was so we are coming to a altogether different ball game now. This is a very interesting case study. My dear friends, this is about composition scheme case study. So I'll take you to a very nice story that you may like. So every one of us mostly like the ice cream thing. So doing an ice cream party sort of thing. GST department officers went to an ice cream party at an ice cream parlor after a hectic schedule of audit of a large industry. So one of the officers saw composition GST number mentioned at the premises of ice cream parlor at that vendor. He was a manufacturer of ice cream. His brand was there. So out of the curiosity, he asked the vendor about the composition scheme applicability on his thing. So ice cream parlor manager mentioned that, sir, all these matters are means looked after by my tax consultant. He is handling my GST work. The manager asked, sir, you tell me which flavor of ice cream do you like? What ice cream flavor is needed by you? So the officer replied, I want the GST flavor of ice cream. So managers really got shocked. Sir, what? I don't have this flavor. So the officer told, have you got my point? The officer replied that you can't chill anymore. You have to pay tax at the rate 18% with effect from date of your first invoice till today and with interest. So everybody was shocked that what happened. So the officer actually clarified that under Section 10(2) of the CGST Act 2017, a person engaged in the manufacturing of goods notified under the Act, such as ice cream and other edible ice, whether or not containing cocoa, then pan masala, tobacco, and manufactured tobacco substitutes is not eligible to opt for composition scheme. My dear friends, notification number 14 2019 dated 7 March 2019, other relevant provisions clearly exclude manufacturer of ice cream and kulfi from availing composition levy. So the ice creams are not chill anymore. The pans are not sweet anymore. So it should be focused that being a chartered accountant, we should advise our clients very properly that if a ice cream manufacturer or a kulfi manufacturer wants to avail ITC, basically wants to have a composition levy GST registration, we should clearly say him, sir, these are prohibited. You cannot avail them. You must be focused with your 18% tax liability on your products, or whatsoever applicable rates are there on your products. You must stick to it. You are not eligible to take composition levy registration. So moving ahead with the other case study. So my dear friends, every one of us must have went for the GST audit, and we have seen that notices are being received. So what is the due date to receive notice, sir? I don't know. For some years, someone might have got a notice for 1819. So he would have simply asked, what is the due dates? I am not aware about it. So looking into books or even for our clients, if the accounts team is handling the entire matter, and chartered accountants in case were not engaged. So the due dates scenario are not known to all the accounts teams. So we should focus in understanding, we are called as the experts of our law. So we should understand what due dates are most important in this case. And secondly, if during my GST audit, I got some notice that, sir, you need to pay in this delay filing of returns for every month when you have actually filed it on delays. So you need to pay the liability on that, late fees on that. So are there any exceptions out of it? So for that, we need to focus. See, this is a time limit for issuing of show cause notices under section 73, 74. Okay, and 74A also. Now we should understand. So for 2017-18, the due date for issuing notice, a show cause notice, was 30th September 2023, which is long gone. No further notices can be issued. And sorry, for the year 2017-18, section 74, which can be a malified intention section. So for that, maximum due date of issuing show cause notice has to be 7th of August 2024. If you might have got the show cause notice and order was pending, you must have received the order on 31st 12 2023 in section 73, or in section 74, late by late, the order should have been issued on 7th of February 2025. If no notice has been received, no order has been received, then don't worry, that years are gone. You won't be receiving any further notices out of it. Now, for for the year 18-19, we need to focus that actually how much time do we have, what time has elapsed. So for 18-19, the due date for issuing show cause notice was 30th January 2024, and issuing of order was within 3 months, that is 30th April 2024. But in case the department has a view that there was a malified intention, section 74 was imposed on, the show cause notice has to be issued till 30th of June 2025. I think we are already sitting in the month of July. If you have received a show cause notice, then you need to worry. Otherwise, you don't need to worry at all, because if you have received a show cause notice, then your order can be received till 30th of December 2025. However, if you have not received the show cause notice, you don't need to worry for 18-19 as well. For the year 1920 and onwards, there is in section 73, again, the time has already elapsed, but under section 74, the department still can issue you a notice till under section 74, a show cause notice can be issued till 30th of September 2025, and order should be issued by 31st of March 2026. So I think we have 2 months more for for the year 1920 if show cause notices are pending, or if you must keep on watching in your client's login that no notices are received under section 74, because if you are having this only 2 months time, any notice of show cause notice is issued, you need to immediately reply to it so that the order should not get issued to you. From the year 2020-21, the notices time of section 73 has elapsed, but section 74 is valid and till 2026 and 2027. You have still having 2 more years till the notices can get issued. We need to focus for 2021-22. The year, the notice can be issued in next 2 months under section 73, which is 30th of September 2025. See, once the show cause is issued, order automatically gets issued, because department also runs on the time barring. They issue you the notice. In case you have any objections, you can either go for a review thing or you can go for appeal. We all are hopeful for getting this GST appellate tribunal starting very soon in every state, and we are hopeful for having a wonderful practice there also. Now, for 2022-23, the time is very long till 30th of September 2026. And for 23-24, it is 30th of September 2027. You have a very long time of almost 1 and 2 years till you can till your assessee can get a notice. So you need to constantly verify and check on their portals whether any notices are issued or not, any show cause notice is issued. So these things should be kept in mind even for audit also, because the sections are same. If the department is issuing you a notice under section 73 for time barred cases, you can simply, you don't need to work on anything else. You can simply move ahead and get your this appeal, basically that order dismissed through the appellate authority being time barring. So very focus very well on the dates mentioned here. Now, we were discussing about due dates. Okay. So there were some due dates which earlier we were discussing that, okay, I need to pay late fees on every return I have filed belatedly. So every one of us understand the panic period of COVID-19. We all understand that during COVID-19, not everybody was filing their returns in time, though the wonderful GST came into existence, but there were bad times for entire world, entire humanity. So we all understand that there were some months for which government also have taken steps and asked for a relief. Government has given notifications that you are not, you don't need to worry for paying of late fees or interest. So these are some 6 months. So these are for all the parties, means for more than 5 crores, February 20 to April 20, and March 20 to March 21 to May 21. So due dates were 20 for of every subsequent month. So the dates were extended for almost some 15 days time, so that the returns can get filed in the tough times of COVID. So interest was not applicable or applicable at a lower rates, and later on the interest was applicable for a higher rate after that due date has expired. Sorry, let me have a glass of water. So my friends, this is a chart you can refer to, and you can refer the due dates in case you are having any of your months mentioned in this in your GST notices about late payment of tax or late filing of returns. You can simply use this dates and use these months and ask for a relief of tax, basically late fees. So now, even this also comes for the late payment. So late fees as well as late payment interest. No interest can be charged till these dates in the fourth column, and interest up to 9% can be charged as per column fifth for the dates mentioned in column fifth, and then a regular rate of 18% can be charged, which are mentioned in column number 6. Moving ahead, we are discussing a very a wonderful case study again. So this was one of the incident which actually happened with a fellow chartered accountant. So RCM under GST on renting of property. We all understand that renting of property was creating a very different scenario for everyone. People were earlier curious that, okay, whether my property is rented, I need to take GST registration or not. My property is basically someone is running hostel, so whether it will be considered under renting of house property or not. Then some commercial properties were there. The person is not registered in GST. He is not having his receipt of more than 20 lakh rupees in toto of service or goods or any other receipts. So he was not liable to take registration under GST. So what will be the tax liability? Whether the taxable person is taking that premises on rent, so whether he need to pay tax or not. So this is a small gist of the entire thing we are talking. But let me take you away with a case study. So Mr. Binod, Matrix Consulting is a firm. So Mr. Binod was there. He was having an operation in its business from its uncle's premises. So Mr. Binod was operating the entire business of Matrix Consulting from his uncle's premises. Uncle is an unregistered person. Uncle was not having any other income. He was having one office. That too, he has given to his brother's son that, okay, beta, I am your chacha. You enjoy this property. You just give me rent time to time basis. So otherwise, I don't have any issue. You use my premises and increase your business. I am giving all my good wishes as well as to you. So Mr. Binod was using this premises of his uncle, which was an office against which Binod was making payment of rent every year, every month, every year. So department issued them a notice for conducting an audit because Binod was doing good. He was doing work of bigger universities and IIMs, IITs everywhere. He was doing some good works of consulting. So department issued him a notice that, sir, please, we want to visit your premises. We want to see your profit and loss account. We want to look to your books of accounts, what all services you are giving. So please do share us. Binod, being a proper taxpayer, he actually approached that, okay, sir, these are my P&L, so you can verify them. So while conducting, suddenly the inspector, a very smart inspector was there. He actually came there and he started looking into the profit and loss account. As he was watching, he suddenly watched that, yeah, you are paying rent every year. Why are you not paying this reverse charge, this GST on reverse charge basis for renting of house property? Sorry, renting of commercial property. So Binod is not a technical person. He was not knowing GST. His CA was filing his GST returns. He was looking after his entire profit and loss and everything. So while conducting, department was doing this audit for 1819 to 22-23. That was a 5-year period. 1819, 1920, 21, 22, 22, 23. Yeah, almost 5 years. So the GST officer asked for GST on RCM basis on rent paid as reflected in the profit and loss of the business. So the Mr. Binod immediately called his CA, asked for his help because he was not aware of what laws are in force or not. As the officer was demanding for interest on non-payment of GST, however, no notice was issued by the officer. He was asking that why you have not paid. He didn't went into intricacies, but due to simply asking of questions, Mr. Binod got panicked. Mr. Binod asked the CA that, sir, why have you not considered this thing while filing my annual returns? Sir, you were doing my audit, sir. Why have you not checked this while you were filing GST 9 as I was asking for your help in that GST 9 and 9C audits and all? Sir, now I am going to face a very bad time, sir. I need to pay reverse charge basis for last 5 years, and I need to pay this with interest, and the department is going to harass me like anything. So the chartered accountant told, relax, Binodji, relax. CA asked Binod to relax and have a sip of water and opened a notification. The chartered accountant told that the goods and service tax is a comprehensive legislation that indirectly levies a tax on supply of goods and services in India. Under the notification of 2000, sorry, of 9th month 09 2024, CGST central tax effective from 10th of October 2024, it clearly states that applicability of RCM on renting of property is from October 2024. So, sir, you don't need to worry on that. For the period of audit which is getting conducted, you do not need to pay any GST on reverse charge basis. So, relax. The same notification was shared with the officer. The officer got satisfied and told, okay, so in current year, are you paying the RCM? The RCM was duly paid as the Mr. Binod was taking proper consulting from the chartered accountant, and the matter got dropped. And as it was actually a time barring matter, the RCM liability was not levied during that period. So the matter got resolved and Mr. Binod got comfortable. Okay, I'm in the right hands. So now I have just covered the case studies. Now I am going for the general principles. So these general principles focuses on how to reply to the department for notices. So the principle of natural justice, it warrants that a person against whom an allegation is levied or made should be given a reasonable opportunity of being heard, be served before taking any action. In a tax proceeding, the officer is required to hear the other side before proposing any action, and to do so, the said person must be served with a notice detailing the allegations and basis on which certain actions are proposed or compliance are demanded. The principle of natural justice comprises of three main principles. Audi alteram partem. It is hearing the other side. Nemo judex in quasa sua. No one should be judged in their own cause. And the third is reasoned decision, means decisions are made with proper reasoning. We should focus and we should, while understanding, analyzing the notices, we should see that our notices are first, even the notices issued or spot memos are given to us, we should get sufficient time to reply to those spot memos. We should give sufficient documents. See, it is very important. Many times if we only say something to a department or give something in writing without any proof, without any proof, so that does not serve our purpose. We have to give reasonable documents, either the lorry receipts or for whatsoever reason the notice is issued. We need to understand the notice and we need to give the proper reply with proper documents. Now, what can be the contents of notice? The notice should be vogue and should clearly spell out the facts of the case. The charges against the noticee, it should draw reference to relevant statutory provisions that are allegedly contravened by the noticee. This would enable the noticee to admit or rebut the allegations and charges contained in the notice. Further, the notice should be served on the person chargeable to tax. Now focus, whensoever you are getting the notice, you need to understand under which section that notice is issued, what are the facts of the cases on which notice is issued, is there any actual non-compliance for which the notice is getting issued. So you have all these points, by that you can give a reply, a proper determined reply with relevant documents, with relevant proofs, with relevant evidences which can prove you right. Or if you are getting something that, okay, I might have done this non-compliance, then that notice clearly mentions that, okay, these are the points. If you have some due dates or something like that, for this period the interest is not leviable or something is there, so you can mention that, and for the balance notice you can pay your tax. So that should be very well mentioned in your notice. And you can always give a reply to your notices, give a timely reply. See, I have heard a very good thought in while I was pursuing my LLB also, that never, 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 never ever leave a case unattended, because any unattended case can cause a very big harm. So being a chartered accountant also, we should focus that no notice should be left unattended. So in case the notice is being issued and later on department concludes the entire proceeding, they issue a order. So what all should be the contents of order? The order should contain findings of the issue raised in the notice and contentions and submissions made by the notice. Those submissions and contentions are given by chartered accountants on behalf of noticee. So we should focus there. The order should be specifically addressed to the contentions urged by the noticee, including judicial decisions cited. The adjudicating authority should apply their minds to the facts, issues, contentions urged by the noticee and evidence on record and reach a finding which forms the substance of his responsibility before passing the order. Department normally considers all these points and they issue an order which generally gets approved by the higher authorities. So now at the end, we are discussing about the principles of evidence. So we are discussing about replying of notices. So principles of evidence. Relevance of electronic records. Nowadays, everything is available online. Many of the softwares are giving GST 2A report, 2B report, GST 3B report, GST annual turnover details, item-wise list of your GSTR 1 which you have uploaded. So all these documents are there. So relevance of electronic records. We need to understand that these are one of the evidences which can be used for us or against us, as these are actually documents which the assessee or the noticee has already uploaded on the website of on GST portal. Second is burden of proof. In case any notice is issued, the burden of proof is always on the noticee, that he has to prove कि okay, I have not done this thing wrong. This should be very focused thing. We need to prove that I have not done anything wrong. So you need to have sufficient evidences for that. The degree of proof should be there, that whether this proof is well and sufficient. The timing of evidence is important. You have to check that whether this thing was concluded in time. For example, in case of any ineligible ITC is wrongfully availed, that you have sufficient time to reverse that. If you have reversed it in time when you are already having the excess ITC available without utilizing it from your credit ledger, electronic credit ledger, if you have not utilized the amount and if you have reversed it, then you can ask for a relief of not charging any interest and following the 32nd GST Council meeting minutes and relieving you from any interest and penalty. So the timing of evidence is also important. Expert advice. My dear fellow friends, in case we are not all experts, definitely everyone is having a general practice, a special practice. So in the cases where the tax effect is higher or where the nature of transaction is actually crucial or critical, we should always go for an expert advice for some law firms or from our known chartered accountants which are doing excellent in their work, which are experts in their knowledge. We should always use their advices. As I told, we should use the institute's material to understand the facts. Institute is having some of the class books. The understanding from institute's books are makes us par excellence. So they are having a very good books. We should read from that. We should understand the topic. We should understand what things are required and how we can reply through that particular items. And we should also understanding reading between the lines. That is again a very crucial thing. Now, the other point is admission of certain facts in the statement during investigation. For example, some DGGI, Department General of GST investigation people came to the premises. They asked for certain facts that show us this, your goods were transported, show us the CCTV footage, show us the lorry receipts. So everything should be available. We should remain very cautious that documents should be available at the premises of the assessee or the noticee, so that every document is available. You can show it, you can show the lorry receipt, you can show the CCTV footage. See, this much of goods were dispatched actually from my premises. You can share that footages, and accordingly you may get relief from that. Now, privileged communications, affidavits is again a very important aspect, that in case you are right and you want to say that, okay, I can give this on affidavit. What is affidavit? Affidavit is something, I am saying this as a shapat. I am taking a shapat that whatsoever I am stating, just like we have heard in this quotes, मैं जो कुछ कहूंगा सच के सिवा कुछ नहीं कहूंगा. In the same way, we need to put the affidavits. So whatsoever facts we are mentioning, if something happened and the thing is genuine, we can put it on affidavits. Please note, no wrong affidavit should be given to any department. We should be very loyal to our profession. We should give only the correct and positive picture. Only the right things should be done by us. The last thing is application of CPC to GST issues. My dear friends, it is not only the time that we are only the chartered accountants. We are learning every day. That is why we are called as practicing chartered accountants. We are practicing every day. We are learning every day. We should start reading the criminal procedure code, civil procedure codes, Bharatiya Nyaya Sanhita, about what all measures we can use in the GST issues. So I would not take much time. This was a small presentation from my side. I would just take the queries part. Yeah. Yeah. Which one? 24. So I have got a query. Just give me a second. So I have got a query on unified framework under section 74A. It is yet to be notified in the CGST Act. It is an administrative system introduced by CBIC to deal with fake input tax credit. So the cases in this are in coordinated manner. It is designed to prevent duplication of investigations. So when multiple invoices are being issued, and GST authorities like DGGI, CGST, SGST, or DRI, they come into picture, and they understand that, okay, something very wrong has happened. So they take up the matters. So it is section 74 is not yet operational. The unified approach is being implemented through CBIC circulars and instructions. I'll take one more query. If audit memo has been issued and demand paid and settled in any of the case, can department open an inquiry related to the same period again? So generally it is not happening. This query came from Jamshedpur. So generally, if audits are concluded, so on the same matter, see, there are two different departments, CGST and SGST. If CGST has already conducted the audit, then SGST doesn't know about it. Everyone today in departments, they are getting a system generated reports. So if there is any difference in your GSTR1 and your books turnover as you have filed on income tax or something like that, so immediately you are getting a notice. If you have taken something in GSTR2A or 2B and that invoice is not uploaded by the office, by that particular vendor, so then you immediately get the notice out of that. So if your audit is already concluded, you simply need to put that audit report, you need to attach that audit report and give that this matter has already been addressed, and you need to send it to the relevant department with the audit report. So matter will get resolved. You don't need to worry at all unless the matter is actually crucial and may contain something of means demand which is getting evaded. Yeah. How many times an officer give adjournment during the course of GST audit? So that is a very good question. See, I mentioned this very earlier also, that generally department time limit is of 3 months for conducting of audit, and later on it can extend to the 6 month by the commissioner. But still the commissioner has powers to condone it, because due to several reasons. So if you will say that he has delayed the audit proceedings, normally department does not delay the audit proceeding unless there are transfers happening in the department or jurisdictional change happened in the department. Otherwise they don't delay the proceedings. So that must be only the case where either the department would have initially done the inquiry, they might have got the list of people whom they have to do the audit earlier, and it would not have got concluded, because on checking of the systems and records they might not have got much material tax effect. So that can be the only reason. Otherwise department does the audits on time. In case they have given any delay, you can simply reach out to the assistant commissioner or the adjudicating authority and request for a early closure of your audit if you are well prepared for it. I would take just a last question, because we are already short of time and we have just concluded the matter. Give it to me.
Thank you, sir. Thank you for such a
Okay, ma'am.
thank you, sir, for such a valuable presentation and deliberation. Thank you.
Thank you, ma'am. Thank you, everyone.
Sir, we can sign off for the day.
Yes, please.